Right, everybody. So thanks for being here today. I have a really special guest today. My tagline, or one of my taglines in coaching after 16 years of doing this, was people always ask me, why did you get into why did you get into coaching? And I've been in real estate for decades, but why'd you get into coaching? And my answer has always been because I got tired of watching agents die broke. And I know very similarly to that. And it's a sad situation. We have an industry where we can make a lot of money. And in good times, people do. In tough times, people don't. And what happens is that they don't know how to set themselves up when the times are tight. When the times are good, be ready for the times when it's tight. And it doesn't matter how long you're in this business. I'm looking at Ebby Bogamo right now, and I met Ebby probably 35 years ago, I think. And she was in my market and now is in the Missouri market. And when someone like her, who was an icon in our industry in my market and now is doing still business over in another state, is on a call like this is an important call. And things have changed a little bit. It costs a lot more to do business, in my opinion, than we used to pay, but in different ways, right? And nobody taught any of us how to run a business. We went and got real estate licenses and we went out and sold real estate. We bought signs, we bought cards, and we started talking to people because that's what we do best. However, I don't remember anybody ever having a conversation with me about how to set your business up, how to set your corporation up. Do you do an S-Corp? Do you do an LLC? How is it different in other states? And then what do you do with the money, the paycheck that you get? And what we always have said, and it's funny, Abby, I was talking to Pete Neary, oh gosh, about a year ago, and he goes, you always know when the market's going to start to go a little bit crazy and tank because all the realtors have gone out and bought the most expensive houses, the most expensive cars, and have bought all motorhomes and boats and everything else. It's coming. So that is one of the signs we always use. We're like, uh-oh, it's coming. And so when you start seeing that, and I want you all to hear this because you could be one of those people. Hopefully person's not sitting in your seat. But I think with Andy today, you're going to get some major tips. Now, Andy Mullholland and his wife, Ellen, started a company called Simple Numbers. I'm going to let him really explain how his journey got to that. But he was a producing agent with a team he had built and realized he saw the gap as well in our industry and leaned into doing bookkeeping for realtors. And in that world is how I think I got introduced to you maybe through Kyle Whistle or somewhere I heard about you and a couple of years ago. And I started talking to him about my personal coaching clients, how he could help them. And right now, I think I have about 15 clients, and out of those, probably half of them are using Andy. On top of that, there's agents out there that I don't coach that are using Andy. And it's affordable. That's number one. I want you to go into this thinking. And as well as his audits are absolutely enlightening. If you are a solo agent running a business, you need him. If you are somebody who's building a team, has a SEAL team, wants to go bigger, you need him. And if you're a big team, you need him because at every point, there's three sections, and he's going to talk about income, cost of sales, what that is, and expenses. And I started using CTE probably 8-9 years ago with my clients. Basically, it's a rule. They have to have CTE, which is a 3,000 layer spreadsheet that a really smart guy named Calvin built. And they have to use it to coach with me so that I can see behind the scene, because what we say on a coaching call isn't always the facts. And our mind plays tricks on us sometimes with our money. So I'm going to turn it over to Andy Mullholland. Andy, tell him who you are, how you ended up in this spot, and then I'm going to have you dive deep into those questions that you and I were discussing earlier.
No, that's great. Thanks, Yvonne. I appreciate everybody jumping on and just being able to be part of this group. I know you're all agents that are focused on growing your business. And that's what I love. I think people who look at this like a real business, right? Because in that structure comes freedom. It's funny, it seems odd, but the more structured we are, the more freedom we can find. And I think that's what I love about it. I'm all about freedom. That is the whole reason I started a business. Freedom. I have 4 kids. We homeschool. We have a farm. We like to travel. Every economic, financial decision I make is around whether or not It provides more freedom, not just for me, but everyone that is influenced by me as well. And so I didn't, gosh, I'm just trying to think how far back I want to go. I'll go back to high school, believe it or not, because no one, as Yvonne mentioned, teaches this kind of stuff. But really, when we think about why we do what we do, it is for others. It is for freedom for ourselves and for others. Our families typically is the number one reason we do what we do. Obviously, we impact our clients, we impact our staff people, we impact our other people in our office, our agents, if we have them. So there's just this ripple effect of impact, but it all starts with, and the reason we do this is to create that freedom for ourselves. In high school, no one taught this stuff to me. I remember my wife now, we met when we were 17 years old, and we've been together since we were 17 years old. I remember her being good with money and me not being good with money, and me bouncing checks and me thinking it was no big deal. And she's like, you got to stop doing this. You're getting all these fees. And I'm like, I just thought that's how the world worked. And I remember debt being this normal thing in my brain. That's just how you operate. You get a big car payment. You have all these credit cards. It's just how you operate. Well, I came across Dave Ramsey's program when we were newly married. My wife was a nurse at the Mayo Clinic. And I said, we got to live differently. I got to think about my financials and be proactive with it. Not that everything Dave Ramsey teaches I 100% agree with, but the core principles I do agree with. And we decided to get out of debt. I was working a full-time job. I got a second job as a limousine driver, paid off all my debt. All of a sudden, we had no debt and we had good income and we had 6 months of reserves personally saved. The world changed in that moment for me. I didn't owe anybody anything. And the world changed for me. And that is when I decided to get into real estate. That was 2008. What
Wow.
was happening
So
in
the crash of
2008?
the market.
What was happening, right? So I remember the place I worked for as a limousine. The guy's like, "Are you sure that's what you want to do right now?" People just thought I was nuts, but looking back on it, it was such a huge blessing because I learned how to do the business the right way because I had to. You were saying, Yvonne, people were not buying boats. They just got done doing that.
Right,
They
exactly.
weren't
Well,
buying
we learned that in
fancy stuff.
1994 because I started with my
Okay.
husband in 94, and in 94 was the Southern California aerospace crash.
I
So
see.
we had that first, and then we did the 2008 one. So by the time we hit 2008, like you, I met my husband, who I call the bean counter. And
Yeah.
basically, he taught me a saying, when we get over the hump, we can have that. So I listened
Mhm.
to Getting Over the Hump for years, and you played broke. We played like we
Right.
didn't have any money, but we worked our tails off and then got our freedom.
So for me, it was a blessing to have started in that position, and I had really good luck right away. I was able to sell a lot of homes very quickly and had success there. But then all of a sudden, I realized I remember making six figures in my first year, and I had never made six figures in my life. In fact, never thought that was possible for me. Such a limiting belief around that, especially looking back now. Oh man, if I just could go back and tell myself what's possible at that point. But I hit that number and that was awesome. It was changing our lives financially. However, we had kids on the way. I think at that point we had one and we had another, and I was grinding. And I'm thinking, this is really good, but I'm going to go follow some of the top agents in my marketplace and see what they're doing. And what I realized very quickly is they have been in the
Oh,
business. Whoops, sorry. They had been in the business for years and they were all grinding on Saturday afternoons, calling expireds, physicals, all these things to keep the business going. And I was just thinking, that is not what I want either. I want to grow this thing, but there's got to be a different way to do it. So I remember going to my wife at that point saying, we're either going to get out of this business or we're going to do this differently. And we're going to run it like a business. And so we did. And I shifted to building a team, brought in agents, trained them. I remember hitting a point where I quickly realized I had set things up incorrectly financially because I was selling more real estate with agents now on my team and staff people and making less money than when I was a solo agent. And I see that now.
all the time. It's the big challenge. It's so
Yeah.
hard.
And on paper, it looked like I was doing great. I remember being at a conference for my broker at the end of that year, being on stage, getting an award, and people coming up to me afterwards saying, you've only been in the business for a couple of years. How are you doing this? And I'm thinking, in the back of my head, I'm thinking, you don't even want the business that I have. If you actually knew what it looked like financially, you wouldn't want it because I have to work to keep this business going. If I stopped selling, I would be losing money in a sense. And so I knew that that wasn't going to work. And I had to get my economic model right. I had to get this structured correctly, but I needed to do it simply because I don't have a college degree. I don't have formal financial training and education. I've learned it by doing it. And at that point, I just hadn't learned some of those things. So we shifted. We were able to build a team where we sold 200 to 300 homes a year. I exited production completely. I had a sales director. I had an operations director. We had ISA setting appointments. We had a team of 12 to 15 people, and it hummed right along. And I could go in on Tuesdays and be the chief evangelist, and it worked. However, that got to the point where I get bored with things pretty quickly and I'm ready for the next challenge. I kind of felt like I had built that where I wanted it to go. And financially, I didn't need it anymore. I think that was one of the things, again, I always run my decision-making filters to is every decision I make is, does this provide more or less freedom? And I still felt stuck a little bit with that business. I built it to the highest level I could, and I was still having to go in on Tuesdays. I was still having to be involved. I didn't necessarily want to grow to different markets. So anyway, I walked away completely. People thought I was nuts. I remember getting phone calls like, "Are you okay?" from other brokers and agents like, "Are you okay? What is going on? Is everything all right?" Everything is wonderful. And that is why I can walk away. And it was because I dialed in my economic model and was disciplined around it to be able to build this thing profitably. And that's my mission now, is to help other people do that. I'm quote unquote retired. I'm a farmer and we hang out with our kids and travel, but I can't stay away from it because my goal is to eradicate real estate agent poverty and that path that so many are headed down. Because why? Exactly what Yvonne said. We're so good at what we do, our job, but there's a shift that has to happen from our job being selling real estate to our job being running a business. And that shift had to happen for me. And when it did, things changed. So that's really what our drive and our passion. And what we do now is just help people do that through knowing their numbers. As Yvonne mentioned, there's a quote from a CEO of what's a company called Mix Panel. He says, most of the world will make decisions by either guessing or using their gut. They will either be lucky or wrong. And that's not acceptable to me. We got to change that. And so that's what Simple Numbers does. Now the question becomes, well, what numbers and what do they mean? And how do I look at them and what should they be? And that's really what I love about Simple Numbers is we bring those numbers to you, but we also, and I'm not here to sell anything, but I just want you to think the right way, is we've got to have financials that are prepared in a way that is specific to real estate, not just general business, because our business is different and it's a service-based business and it has certain nuances that make it unique. And we have to make sure that we're understanding what's going on there. And so I think that's key. So anyway, that's the background of the story.
I'm totally stealing eradicate real estate poverty. I'm stealing that line. I will give you credit for it, Andy.
No, I think that's exactly what you're doing as well. And you said it. That's why we align, is because that is the mission. Because this business is it can either be a absolute asset. I believe it is one of the most amazing. It took somebody who has barely graduated high school, was driving a limousine, and allowed them to change not only my life, but I feel just a lot of people's lives. And what other business can do that? Right. And so it can be an asset, but man, it can so very quickly be a liability as well.
So let's start with best practices for a real estate agent in the basic terms of setting up bank accounts and using a banking product. I see so many Facebook pages where people are going, I use Gusto and I use broker this and mint that, and it's an app on my phone. And I just don't see that being robust enough to run a business on. Would I be inaccurate in that?
Well, it depends. I think it's less about the technology and it's more about the system, right? I've got agents, I've seen agents who literally have paper systems still for many systems in their business, and it works like clockwork. If it works, stick with it. I guess, again, the key is like, what are you trying to build and what's the goal here? But I think that some of the more basic things that we got to have in place are, we've got to separate our business and our personal stuff. Like that is the most basic thing. And I would hope that everybody here has got it set up. If you don't, that is like step one. Don't do anything else until you've separated business accounts from personal accounts. You've truly got to run your business like a business.
So that means bank accounts, that means credit cards, that means everything. So I know, to give you an example, talking about my husband again, who's the bean counter, he gave me a Arnold Consulting Inc. credit card when I started, right? When we started. And he goes, think of it this way. If you work for a corporation and they gave you a company credit card, what would you charge on that? Would you go to Target and buy your kids Easter presents? Well, if you're running your own business, maybe, because you might be able to write that off as a gift expense, but be careful. Or would you go, are you putting your meals on there? Are you spending, is that the credit card you use for all of your marketing so that you can keep it all in place? And then do you have a personal business card or, excuse me, personal card? And then all the way down to bank accounts where you have them set up. And we always had the property management bank account and then our personal account so that we could run when we were running real estate in a lot of REOs and doing the rehabs and stuff like that. We had to put our own money out on those to get them done. So we had our own business account for that. And I know a lot of agents to this day do staging. They do rehabs on their sellers' homes, and they're putting out that money in advance. And you need to be running that through an actual business checking account, credit card account. So bank accounts are important. And then what about the tracking of that? So QuickBooks Online seems to be the big daddy of them all and the easiest one for most people to use, but not easy for many of us. So tell me
and I mean, it goes back to, it's all about when you build this business, one of the things I learned is just leverage. And so you should, frankly, no one I would imagine no one on this call should be doing their own bookkeeping, period. Now you should be looking at the numbers and understanding them. That's a whole different thing, but actually pushing the buttons and pulling the levers to make sure your stuff is categorized correctly. Number one, you don't know how to categorize it correctly. You can learn, that's fine, but what's your dollar per hour activity doing that, especially every month, putting in numbers? So if anybody here is doing their own bookkeeping, stop. Whether you work with us or somebody else, doesn't matter, but find someone to do that for you, because that's how you delegate and elevate to the next level. And just keep doing that in your business, in all the activities. But for what it costs someone to actually categorize your books, your time is so much more valuable doing other things in your business. So that's
give us an idea of what that would cost, because most people think it's an accountant and they're going to be putting out thousands a month.
No, not at all. For us, it depends on the size of your business, but you can hire us for as cheap as $199 a month to do all of your bookkeeping, reporting, everything. So if you think of the number of hours you're spending doing that, number one, if you're not doing it, the actual cost of you not doing it because you don't know your numbers, and if you extrapolate that over the cost per hour of your day and your month and your year, that's huge. Number two, if you are doing it and you're not tracking the right numbers and you don't understand them because they're not real estate specific, the cost behind that, right? Those opportunity costs of doing it incorrectly. And then number three, just your time. So when I put those two together, it's like, absolutely not. I don't want to touch this stuff, but I got to make sure I understand it. So yes, QuickBooks, spreadsheet, Xero, I don't care which one you use. We only use QuickBooks Online, but whatever program allows you to understand what's going on in the business.
So one of the things I'm going to be giving everybody after this call that comes out, I'm going to send out with the recording to everybody that registered, is something that I actually are indeed from you, ripped off and duplicated. And it was from your free stuff from your website. It was your real estate team chart of accounts.
Yes.
And basically, you guys, the chart of accounts is probably the one thing that people don't understand most, in my opinion, that when you're not used to doing bookkeeping, is getting your chart of accounts set up. And it tells you what things are and what you should categorize them in. Okay, so this is just added to a spreadsheet that I originally had developed with the net worth tracker that's on there. So you can list all your assets and your liabilities and you can keep track of that, as well as just a really simple spreadsheet of a monthly expense worksheet. So this is just going to go out, and so that you know kind of what the chart of accounts means. So when you do hire someone like Andy or that, you'll know what they're talking about when it comes to, hey, what does this expense register as? What kind of expense is it? Where should I put it in the chart of accounts? Because they'll ask you those questions.
For sure. That's the chart of accounts is really just how we set up your QuickBooks. And again, whether you work with us or somebody else, have them use that structure. And maybe this is where I'll share some stuff on my screen to show you the structure, the idea behind that structure. I remember getting started in this. I didn't even know what a chart of accounts was, right? But all it is just how we organize your bookkeeping so you know where the money's going. And it all comes down to, if you look at that chart of accounts that Yvonne shared from ours, it is 5 sections, 1, 2, 3, 4, 5. That's it. And that is my biggest advice to everybody, is keep this simple. As soon as you complicate this, the value goes down, right? In your numbers. So keep this simple. There are 5 main sections of any real estate business in their financial reporting, 5. And that chart of accounts has those 5 main categories. Now there's subcategories and even subcategories, but they're 5 main categories. The first one is that total revenue. If you look at your business visually, that's the pie. Your business is a pie. This is the money that came in to your business. Now, one thing I see people get confused about this number one total revenue is this is the amount that came in before your broker took any of their portion, before your agents got paid if you have them, before you paid any expenses. It's truly the top line that your business generated before anybody touched a dime of it. That's your pie. That is what you are now working with. Now our job is to slice the pie up. We got to start handing out pieces of pie to people. The first piece of pie is our cost of sales. That's now what goes out, right? And that goes out. So if we look at your now we have a piece of pie that went out. It's our cost of sales. That's simple number two. That's the first piece of pie that got paid out. And who's that going to? Typically your broker, your agents in their splits, and any referrals fees that you're paying to either outside agents or third-party lead sources. So that's the first piece of pie. Now we have number three. The next section is going to be your gross profit. Gross profit. That's this part. That's what you have left. And guess what? That's the amount that you guys are used to seeing as your quote unquote income, because that's the amount that actually hit your bank account. Because the broker and agents got their portion. You never saw that money, but your business did generate it. And so we're left then with that gross profit. And that doesn't matter if you're a solo agent and you pay your broker. That cost of sale is a piece of pie that gets paid out. We need to know how much is going out and then know what you have left. That's the first three sections. I find that most CPAs, bookkeepers, they don't even track those first two sections, total revenue and cost of sale. They start with gross profit. But if you're going to ever shift to building a business and really run it like a business, run it and have a team, you've got to track your cost of sale, because if that piece of pie gets too big, you've lost before you've even started. There's not enough left to still pay the bills and have any profit. So we got to be tracking those margins. How big is each piece of pie? The third one then, the fourth one is your operating expenses. And we tend to look at it, there's only three categories of operating expenses. Number one is lead gen marketing. Number two is people expenses. And number three is overhead. Every dollar you spend is going to go into one of those three high-level categories. And then, of course, there's subcategories underneath that. Lead gen marketing would have print marketing. It might have internet lead gen. You might have past client events. And then underneath those could be subcategories of different types of internet lead gen and so on. But every dollar you spend is either a lead gen marketing dollar, a people expense, or an overhead dollar. And so that's that fourth section is operating expenses. How big is that piece of pie? If it's too big, if it eats up all of this, guess what? There's no money left. So we need to make sure that's staying within a certain size. And then, of course, what you have left then is your net profit. So every business we work with, real estate team business that we work with, and that's all we work with, from solo agent all the way up to our top business does about $15 million in top line revenue as a team, structured this way. And we got to know what your business model is going to look like. Now, let me scroll down, because I've got you're a solo agent.
Andy, I'm really quick.
Yeah, you bet.
I want everybody to think about that for a minute on that last slide. That your net, okay? You have to have your personal expenses out of that, and that's what you're working with, okay? When he talks about separating business and personal, you have to know at the end of the day, how much are you really getting from your business that's going to feed your personal life? And that's where the freedom comes in. So keeping the number two simple number and the number three simple number, or four, operating expenses and cost of sales in check is what's going to make you a profitable company.
100%. This is what I love about keeping it simple. If ever I look at a business's net profit and they're like, yeah, not enough, I'm saying, okay, only two places that we have to look to figure out where the problem is. Are you paying out too much in cost of sale, or are you just spending too much on stuff? It's one or the other or both every single time. Now, some people say, well, as long as I just increase my top line, then it'll fix the problem. No, it never works. Does not work. Get the model right, regardless of how much you're doing in top line revenue, and make sure our margins are correct. Percent is going out in cost of sale, what percent is left in net profit, and what, going out in operating expenses, and what percent is left in net. We just got to move the pieces around to figure out. So for example, a solo agent's going to have a different model than a giant team. Why? Well, let's talk about the pieces. You're going to have a low cost of sale if you're a solo agent. It's going to be low cost of sale. That piece of the pie is going to be really small. Why? Because you're doing all the deals. You're not paying splits to other agents on your team. When you do a deal, you keep 100%. If an agent did that deal on my team, I'd have to pay them 30, 40, 50, 60%. So all I'm really paying in my cost to sale as a solo agent is typically the broker and maybe a little bit of referrals out to people that sent me business. So really low. We got to say, what the gross profit then, it's going to be a pretty high gross profit. In other words, I'm going to keep a lot of the pie after I just pay out my cost of sale. I'm going to have a lot of the money hitting my bank account because I'm a solo agent. So I'm going to have a pretty high gross profit. Then I got to still pay the bills though. And so I'm going to have a pretty low operating expense piece. Now, it's still got me decent, but I'm not going to have tons. Most of my business is going to be probably past client referral, sphere of influence. I'm not going to be spending a ton of money on leads. I'm not going to have a huge office I got to pay for all my agents. It's just me. I'm going to have a low operating expense piece of the pie. It's going to be small. So that means my net profit should be high. My net profit should be high.
Should
be. So if it's not, it usually, as a solo agent, it's usually not because your cost of sale is too high, because that's just what it is. Usually if I see a solo agent with a very low net profit, they're just spending like crazy. And that's a problem. And so we got to get that in line. What percentage do you want of each going towards each pie? It's a pie.
That's why I always say, when you guys go to these events, when you go to these conferences, don't buy every shiny penny you see, because you have to look at it as how it's going to affect your business. Do you really need it? Had solo agents say, I just went and spent a month on Zillow Premier Agent. And it's like, why would you do that? You're a solo agent, Well, so-and-so told me at this event to do it. Spending a month on direct mail pieces. Well, are you getting direct mail pieces and are you getting something back? Yes, it is in the budget. Exactly,
Right.
Kathy.
Yes.
Got to be in the budget.
So there you go. Again, depending on what model you're trying to build, your pie will look different, but it will always have these three pieces. And the goal is to be clear on what do you want your net to be? And then we know what we have left to work with to pay out cost of sale and operating expenses. Now, I don't know if we have a bunch of team leaders or not on this call, but if you run a team, it's going to look a little different. Obviously, an advantage of a team is hopefully the pie is larger. Why? Because if you're a solo agent, you can only do so many deals yourself. But if we have a team of people, the pie is much larger. So even though our net profit might be smaller as a percentage, it's a larger dollar amount. That's why I built the team. I want to make more money in less time, and I could do that through leverage with a team. But you may have your cost of sale is going to be higher. It's going to be a bigger piece of the pie as compared to a solo agent, because now not only am I paying the broker, but I'm also paying a bunch of agents to do a good chunk of the deals, if not all of them, hopefully. Okay. So I'm going to have a bigger chunk going to cost of sale. That means I'm going to have a lower gross profit. I'm not going to have as much left than if I was a solo agent to pay the bills and still pay myself as a percentage. I might have it in a higher dollar amount, but percentage, I'm going to have higher expenses. My operating expenses are going to be a bigger piece of the pie than I was a solo agent, because now I got a whole team to support, and that's okay. But then I'm going to have a lower net profit than if I was a solo agent. I was okay with that because two reasons. Number one, I was buying my freedom. But number two, it was a bigger dollar amount, again, like I said before, because the pie was bigger. The whole pie was bigger. I was working on, revenue versus just like $500,000 of revenue. I was okay with a much smaller piece of net profit.
Is it because you
the dollar
learned
amount was
how
higher.
to control the operating expenses? Well, going to be, and you're going to talk about that, the team splits, operating expenses. You don't want that to grow as your revenue grows, because what most people do is they make more money, they grow these teams, and they think they're bringing in revenue at a higher amount, but then they grow the operating expenses and the cost of sales so much more because they start giving away more splits with the agents. They start spending more money on salaries and not really looking at what the end game is. So, where you have on there the disadvantage is the lower profit margin. So your job from going from selling real estate to buying freedom, you bought freedom to not have to sell real estate on the weekends and nights, but you were still running your company. And so you were paying heavy to that part. So it just shifted, right?
Yeah, you should, you like I said, you became from kind of owner of your job to now owning a business. And if it's truly a business, it will hopefully run without your input, without your time period.
Sales.
You shift
Without the sales, though, is what most
without the
people I
sales.
see.
Absolutely.
They
I mean,
go,
you know,
I'm out of production. And then they walk away from their team and
yeah,
they
no, not at
quit.
all. Yeah. Right. I mean, all the operational side of it, there's, side of it, there's the sales management side of it, the lead conversion training, there's the, I think of all the things I did as the team leader. It's that team leader role. It's the CEO of the business until you replace yourself as the CEO, which I find almost nobody ever does.
Mm-mm.
You're always going to be in that CEO role. Now, maybe you're not doing as much stuff. I got to the point where I was a CEO and I had a sales director and an operations director front stage of the business, and they worked in roles that I used to be in that took much more time. People love being the sales director. Some people love the operational side of the business, and you may always be in those roles. But when it comes to your financial, again, keeping it very simple, if your net is too low, we just have to decide, are we just spending too much, or did we have the wrong structure from the get-go because we agreed to splits that are not scalable with our team? And I see both. I think, I see operating expenses more as the problem because people get in this idea in their head that, well, I've got to invest in my business. I'm going to invest my profits into my business. Well, here's the thing. If you're investing your profit, you have no profit. That's called spending your money. We're all investing in the business, but I think we have to decide how much we're willing to spend. Here's kind of what I see, and everybody has their own way. There's no one way to do this as far as what your economic model should look like. But I want to share with you what I think if you're going to build a team, what I see most teams trying to strive for here with this. I would say somewhere between a 20 to 25% net profit and any owner pay. So if they're paying themselves a salary, that would kind of be in that, with the owner doing zero deals. So if the owner's to the point where they're out of production, if that's kind of the goal we're shooting for, really, I think what I see most people able to hit is the top as close to 20 as we can get. Sometimes it's just a touch lower, but we have 20 to 25% of the pie would be the goal left that the business didn't eat when we're out of production. So what does that mean? That means we have 75% of the pie to work with to run this thing. And for most teams that are able to hit that 20 to 25% net, they're running around, my pen is struggling here, a 30% operating expense model. So 10% on lead gen and marketing, 10% on people, and 10% on overhead. Those three categories I mentioned for a total of 30%. So if they're doing $1 million as a team, they have 300 grand to spend, 100 grand on lead gen marketing, 100 grand people, 100 grand on overhead. And the goal would be that they'd be left with 200 to 250K in net profit and owner pay. They'd have to then split with the government pre-tax. But that would be the goal. For every $1 million, I can make somewhere between $200,000 to $250,000 net and not have to sell a single piece of real estate and just lead and grow my business. But that means we have this piece of the pie here that has to go to that cost of sale. So what do we have left? We have somewhere between 45 to 50% left to be able to pay the broker and all the agents what they need to be paid. That's what I see teams kind of shooting for when they're trying to scale and grow this thing. So if all of a sudden we're spending 50% on operating expenses, guess what? Our net profit is not going to be where we want it to be. We're going to be at like 0. We're already paying 45 to 50% out to the agents and the broker, and we're spending 50. And that's where I see team leaders get in trouble. And now they're stuck in production just to keep the lights on and going. Or they have the wrong splits with their agents. All of a sudden, 75% pie or 70% of the pie is going out in cost of sale. They only have 30% left, and they're spending it on operating expenses. So they're making no money. And what's even worse is if they are still in production and that's their model. Because now, I was there, and it was the worst thing ever when I was on stage at that event thinking, if I stopped selling, our business would lose money. That is not a place we want to be. And so I think it's all about these pieces of pie. How we want each one, starting with that net profit and owner pay. And the way you do it, I see the book behind you, Yvonne, Profit First.
Yeah, I love that.
Everyone needs that in their business, in my opinion. If you haven't read it, if you implement that in your business, Profit First is the solution, that system of bank accounts, how we manage the cash coming through the business. We would do that through Profit First. And we don't have time to get into all that today, but I would just say that is the method in which it's kind of like when I'm listing the goals to get it sold. So when a business, the goal is to be profitable, but how do I actually do it? Well, I have a system to get my listings on the market and priced right and marketed correctly. Well, Profit First is the system to make sure that we become profitable. Follow that system and it works. And so, that's kind of never run a business without, personally.
Yeah, and see, we same exact mistakes that you guys see when you're looking at the bookkeeping. We see it in the coaching side, that whole operating expenses, and then the personalities of leaders who are tied to the outcome of building the team instead of looking at it from a perspective of profitability and giving too much split, too high splits. Yesterday, I was on a call with somebody they had different splits that they were doing on their team, and they are a Century 21 team. So they're in a franchise, okay, which even more cost of sales. And so, those splits, you just have to stand your ground on what business model is. And when an agent says, well, I'm doing these number of deals, I want a higher split, you're not the broker of the company, unless you are. But in most cases, you're not. You have the luxury of saying, oh, I'll give you a 90-10.
Yeah.
I'll
Well, and
give you.
guess what? You can't spend any money on your
No,
team.
there's no spend.
Yeah. And that's traditional brokers are, right? When I was at a traditional broker, when I first started back in 2008, I got a desk and I got a phone and I got internet access, and that was it. And, any money on us, we were on our own, but, they most of the commission split. So I guess that's the question. What kind of team are you building? If you're building what I call more of that teamage model, which is kind of what this one is, it's a large team all working as a group that share a brand, they share a common way, but they're doing their own, they're almost just all sharing expenses. They are not really a team, in my opinion. They're a brokerage that offers a little more value than a traditional brokerage. But what happens then is, in that teamage model, we have a really high cost of sale because the majority of the split goes to the agent. Nothing wrong with that if that's the plan, because then we have operating expenses that are lower because we just, as the owner of this team, we don't have much coming in. We got 75% going out to the agents. We only got 25% to work with. Maybe we'll spend, I don't know, 10%, and we'd be lucky if we have a 15% net. I mean, nothing left. Most of them are spending, maybe got a 5% net profit. Now, if you build it to $20 million in revenue because you have 500 agents, that can work. You can still make really good money on 5%. But the point here is that make sure that if you're going to go from solo agent to building a team or a business, you know what the end goal is. What do you want your economic model to look like? What percentage is going to go to profit? What percentage are you going to spend? And what percentage is going to go out the door in cost of sale? And if you do that, you can build it in a way that you wouldn't build it like I did, where I was stuck in production just to keep the lights on. That's what we want to avoid. That's me and Yvonne being focused on eradicating entrepreneurial agent poverty, because we see it so often, and it all comes down to wrong splits or overspending every time.
Every single time.
Yeah.
And that's and this you're talking about, see a lot of that, especially in like flex teams and Zillow flex teams, things like that, with a 40% fee out to Zillow.
Oh man.
I mean, and growing. And you're doing 500 transactions a year, and 300 of them are Zillow Flex. You work for Zillow. You no longer have an independent brokerage or team. You are
Zillow's
a
the only one
employee.
making money on that deal.
Zillow is the only one making money on that.
Yep. 100%.
And you have to decide, okay, that's fine. Then we call that a lead team. You're a lead team. We have collaborative teams, and then we have traditional teams. And so, there are three models. Collaborative is more where the agents are more collaborative. So they're getting a little higher split because they're not taking as much of your cost of sales or your expenses. So, they're getting a split, and then they're not asking to pay for so much, but they're more of a team where you love the culture and everything's great and everybody works together. But that lead team is a real challenge right now for many, many companies for profitability. It's not there. So
yeah, there's not enough on the bone to go around for everyone. And usually it's the team leader, the team owner, that's the one that gets nothing.
So really quick question about, and I'll get your question in a minute, Will, I got you down there. What are your recommendations for when we look at the building of your business? Okay. Let's go back starting and getting the basics of
Mhm.
Am I a corporation? Am I an LLC? Uh, should I just be an individual? Because what happens out there is many people just go to their accountant, and their accountant, when they go, I was told at an event I should become an S-Corp. And the accountant goes, oh, you don't need to do that. That's too much paperwork.
Ah,
And that's the common response we hear when an agent goes to their local accountant that they use. So, what's your take on all that?
my take is it doesn't matter. That is less important. Okay, so whenever we talk about financials, we have to look at it from one of two lenses, the tax lens and the entrepreneurial CFO lens. Taxes, we're going to look at our books totally different. We're going to run as much through that business as we can to decrease our tax liability. So when you go to that conference and you stay an extra 4 days, we're going to run that all as a business expense, but we stayed 4 days with our family to enjoy the resort, whatever. Was it really a business expense? No. Maybe meals we go on. We say, hey, let's talk about business real quick and we'll run the whole thing through for date night tonight with our spouse. Awesome. Do it. Run it through. Decrease your tax liability. But the problem is you're not getting clear understanding of what's going on in the business. So the way we fix that, by the way, is in your books, and you should all do this. You have two categories of expenses, direct and indirect expenses. Run as much through the business as you can that your CPA suggests you run to decrease your tax liability. I'd love it if your business showed a loss every year on paper. But when we look at it from a business, it's not the right approach. We need to separate that stuff out and look at what your business actually made. We do that by categorizing everything, either a direct or an indirect expense. But it's all, what lens am I looking through this? As far as how you structure your business, that's all about taxes, in my opinion. How can you structure it to be the least amount of tax possible?
So you see, you guys, we have two different conversations. We have bookkeeping where you're looking at your profitability, but then we have IRS conversation. That's a completely different strategy. So the Profit First book was the one where you learn how to make profit. Okay. But then the other book that I love to recommend to people is Mark Kohler's Financial Freedom, which is basically what Wall Street isn't telling you. And this is more into the tax side of it, where he talks about strategies of write-offs and like paying your children that are under 18 years old and how to do it, and all legal loopholes basically because you have a real estate license. So there is a lot of tax IRS loopholes, and this is the book that would tell you that. This is going to get you to profit first. So
Yeah.
these are the best two good books that
there's one called the Augusta Rule, where your corporation can rent your own personal home for up to a week and tax free. And it's like, okay, that's great. On paper, it looks like I spent that money as a business. I didn't. That's the perfect example of an indirect expense. I did it for tax purposes. We got to strip that out and thinking about which way we're looking at the business. Yeah.
right. Will Khalil asks, what are the top 3 things we should be tracking on CTE? And literally exactly what Andy's just been talking about. Income, which is your revenue, cost of sales, and all of your expenses broken out. Now, here's how I look at it. And it was a little different when Andy and I first met. I was telling him how I look at CTE. This is not for your bookkeeping, and this is not for your IRS. This is for you and your coach to look at this and go, okay, I want a line where Andy's people might put everything under marketing or everything under advertising. I want it broken down. So I want to know exact line items on your credit card statements and your bank statements to go in here and go, what'd you pay for Microsoft every month? What'd you pay for GoDaddy? Okay, what'd you pay at Staples? Because now I can go in and go, hey, do you know you're spending X number of dollars on salaries? And one of my teams actually broke it down to the positions of each person on the team and what that salary was. So then when somebody left, you went, oh, okay, we let them go months into the year. So we're saving that 30, 40, $50,000 a year salary, and we moved the money. This one is an example. I told this gal who sent out $250,000 in mailers a year to break it down zip codes that she mailed to and how much each zip code did. And so in her categories of sources to her deals that came in, categorized all of the deals that came through by zip code. Then we had an ROI. So you could see every quarter she put the money in there. Then I was able to go over here to her ROI and determine which zip codes performed and which ones didn't, like this one, so she could move that $21,000 somewhere else or put it back in her pocket. So there's a difference between CTE financial statement that you're looking at every month, every quarter with your coach, and what you're doing with Andy and what you're doing with your accountant for IRS purposes. That's how I look at it.
Agreed. Yeah.
So the other have are a couple of things here. bank accounts, QuickBooks, corporations, doesn't matter, P&Ls, reading a P&L. You showed us how to do that, really super simple, pretty much. And let's talk about how to look at cost of sales and with team members are probably one of our biggest conversations that we have on a daily basis.
Yeah.
Because that and salaries. So your operations people, you have to have a budget. If you're a solo agent, your first hire should be an operations person, TCLC, somebody that does whatever, can be virtual or in-house, whatever. So that's the salary budget. But then when you hire your first agent, and then you start building upon that because you're generating enough leads to do more than what you can do. I'm a person that says anything over 50% split on a team, doesn't matter if you're in a franchise brokerage, you're your own broker, it doesn't matter, or a capping brokerage, lose profitability, anything over 50%, if you're providing everything for that person. Okay. Right. So tell me your take and how you look at all of that when you're teaching somebody on their chart.
Yeah.
Where to save money in that area.
Well, it's all about issue in the absence of value. So what value are you bringing to the agent? That will help you determine what your split should be. And it goes back to, again, this idea of what model are you building? Are you building a bridge model where the majority of the split goes to the agent? But then you just can't spend so much. I don't care if you have a 75% split with all of your agents. Okay, you could have a 75% split with all your agents. You could have an 80% split. But just realize then you have to make decisions around expenses with what's left for you. If you're building like I built, which was more this model, because
this is the most model, by the way.
I would say, because why? We have to decide what is best for three people when we're building our model: the client, like the consumer, the agent, and us. All three have to be happy with the result. And I believe that this model allows all three the best chance to be happy. Now, it doesn't mean they're automatically all going to be happy. It doesn't mean your agents are automatically going to make all the money they ever want. But would they make that at a high split model? If so, they should just go to 100% brokerage. Just go there. That's your highest split. Agents do not care about the split. And if you find those that do, they don't get the value of being on a team, or you don't get the value of being on a team and you're not offering it, or you don't believe in it. So I think that you got to decide what model you're building and then build your splits around it. If you're building this model, which I call the school of fish model, what did you call it, Yvonne, your middle example?
I call it a team.
The SEAL team. Like, we're all swimming in the same direction. If we decide to do things differently, we're all doing it differently. It's like that school of fish in the water that all turn at the same time, right? That is, in my model, to achieve happiness for all three people, because we have a consistent experience for the client. Why? Because we're all doing the same thing. We're not all doing our own thing, right? We're all using the same presentation. We're all using the same admin to do the listing process, doing everything exactly the same. It's like the McDonald's experience for the customer. They know they're going to get the same experience every time.
And your agents get the same experience every time.
The agents get the same
have the system that they want, and they're making money because the leads are coming in. With this model, I'd like you to address the producing agent, still the team lead that's still in production, because we have a couple of those, or like we have a lot of them. And some people give themselves 100% of the commission, and some people say, I'm going to be just like a team member and only take 50%, and the other 50% goes to the company.
It's the most confusing part for people around their financials. And I don't, at 3 minutes, I don't know if I could go through exactly what it should look like, but here's the easiest way to solve the problem, in my opinion. Pay yourself exactly like an agent. I believe that if you do this right, if I were to do it all over, I would do it this way. How should the owner get paid when in production? In my opinion, 3 ways. 1, you should get paid like an agent. If the agent would have got a 50% split, you should literally at closing pay yourself personally 50% of that deal you just did. Number 2 is you should get paid a salary for being the team leader, because you are in that role. You're wearing that hat. It's a staff admin. You're the sales manager. You're probably in multiple. You're the marketing director. You should get paid some form of salary for that. And then number 3, you should get profit distributions quarterly.
Now,
that's
can you
how
do
all
all
the
3,
money should
or
be
do you have
coming
to
to
pick
you.
one or the other?
All 3, in my opinion. You should be doing all 3. Now, once you're out of being an agent, guess what? You're not getting that anymore. You're 100% out. But you built the model correctly as though you were an agent. That's where agents get in trouble. They don't pay themselves anything when they do a deal, and 100% of their dollars go into the business. And then guess what happens? They spend it all. And they make no money. or they spend more than they're even generating, and they're losing money if they stop. If you ever replaced yourself completely in the business, guess what? You've already built in the salaries to pay someone else for those roles. It's already part of the budget. And then you're just an owner receiving distributions because you are in all three roles when you are in production. You are an agent on your team, you are a staff person on your team, and you are an owner. And as you replace yourself in the other ones and you're no longer in those roles, guess what? You're still always going to be in that owner role and you're going to be receiving profit distributions. I find most people are almost always in a staff role and always in an owner role. And so they're always get paid those two, but some of them are able to exit production and they no longer get paid as an agent, but they've budgeted for it. This is people will look at their cost of sale with them and they'll say, oh, I'm only at a 30% cost of sale. I must be doing great. Well, no, because if we pulled your production out where you're paying yourself zero, you're actually like a 60 or 70% cost of sale, but you're doing 80% of the production. And on paper, it looks like you only have a 20, 30% cost of sale. No, let's apply the same splits to your production like you did pay yourself an agent. And all of a sudden, it's a whole different story. So that's where whenever you go to a conference and you hear somebody, they say, oh, I've got a 60% net profit. It's like, okay, well, how much did you do? And are you paying yourself like an agent? How much salary do you pay yourself? And are you running a bunch of indirect expenses through the business or not? And now we can compare apples to apples. So if I were to do it all over again from the beginning for myself and I'm building a team, I would pay myself all three ways until I started to replace myself. Now, if you don't, there's a formula you can use. I know we're at the top of the hour. I can't explain to you, but there's a simple formula we can use to determine what your profit should be now while you're in production if you aren't paying yourself a salary. Your profit needs to be significant. I shouldn't have said a salary. I meant a split. Your profit margin needs to be significantly higher if you are in production paying yourself zero split like an agent. You need to have a higher net profit. Somebody with a 25% net profit, that's 100% out of production, and somebody with a 25% net profit paying themselves nothing on their deals, but they're 50 or any percent in production, they need to have, that's an unhealthy business versus a healthy business. So just looking at the net profit margin does not tell the true story.
No, because their production income is floating the whole company.
Yes.
And so agent splits the agents to yourself. 2 is a salary, so like a staff salary. So, and then profit first is going to be your owner distribution quarterly or at the end of the year that you would do with your tax accountant.
Yeah, profit distributions, I would do them quarterly. At the end of the quarter, we look at, all right, how much money was left in the business profit account? And I pay myself a portion of that or all of it. If I'm a partnership, I've seen people where there's like a partnership and they're 50-50. Okay, you each paid of whatever's in the profit account. It doesn't matter. If you're 100% owner, you get 100%. It doesn't matter. But those are the three ways I think that every team leader needs to consider paying themselves.
That's great.
Yeah.
Very good.
Okay.
Well, this is fantastic. How can they help you?
Yeah, our website, simple-numbers.com is the direct there. You know, there's some different can download, and I try to do a lot of educational training and stuff on our vlog there too. So feel free to check any of that.
So it's funny. I have one quote that when I sent email out to everybody for sign up, who was one of my old coaching clients, emailed back. And I said, can I use your quote? And he said, yes. He goes, I switched to Andy a few months ago, night and day difference from my other bookkeeper. And then I said, can you use your quote? And he said, yeah. He says, I met him years ago at an Eric Hatch event and was impressed then, but I didn't pull the trigger on things with him until I saw a webinar he did with someone else about 5 months ago. When I saw his breakdown on a team that brought in more income but was less profitable and how he was able to quickly identify the issue, I knew I needed to switch. His quarterly meetings with me to help me reach my profitability goal are priceless, and I feel like I actually have direction with my finances rather than some distant bookkeeper who doesn't understand my business and sends me reports I don't understand. There you go. And that's from a producing agent with a team that he's building and all of that. So, Andy, priceless. All of your information, and I will be sending this out to everybody and tagging you in my posts and all of that. So you guys, we don't want you to be in poverty, and I definitely don't want you to die broke. So, so get with money. Thank you all for being here. Thank you, Andy. I appreciate you very much. And we will see you on the next one.